In this video, we'll learn why and how accountants book adjustments for uncollectible accounts. Credit sales are made with the expectation that the customer will pay the amount due later. Sometimes, though, the accounts receivable is not collected. So what does the business do? Well, businesses estimate the uncollectible account expense because the actual amount of uncollectible accounts is not known until later periods. Some companies simply record any receivables over 90 days past due as an uncollectible account expense, whereas others record an uncollectible account expense only for those receivables over 150 days past due and 50% for the receivables that are between 90 and 150 days past due. Other companies base your uncollectible account expense on a percentage of sales or a percentage of credit sales. So it really depends on the company and their experience with their customers. Auditors will likely want to know the average time to pay and how many accounts were truly uncollectible in prior years, meaning your methodology for recording uncollectible account expenses has to be based on reasonable expectations. So to match the expense for uncollectible accounts with the sales revenue for the same period under the matching principle, the estimated expense is debited to an account called uncollectible accounts expense and credited to the contra asset account allowance for doubtful accounts. So here's an example. During the year 2022, Samsung Company had net credit sales of $960,000, and experience shows that 0.5% of the firm's net credit sales result in uncollectible accounts. To record the entry, we multiply the credit sales of $960,000 by 0.5% to arrive at $4,800, and then debit the uncollectible accounts expense for $4,800 and credit the allowance for doubtful accounts for $4,800. The uncollectible account expense can be very material for businesses. And here's an example of Comcast, a telecom provider. What you see here is an excerpt of Comcast's balance sheet and specifically the accounts receivable and the bad debt allowance and doubtful accounts allowance for the years 2018 through 2022. For instance, in 2018, Comcast had a gross accounts receivable, meaning before deducting the allowance, of $11,456 million. Comcast also recorded an allowance for uncollectible or doubtful accounts of $352 million. That's a huge amount, $352 million. As a percentage of the total accounts receivable, it was 3.1%. You can see that the percentage increased in 2019 and then nearly doubled from 2019 to 2020, likely due to the pandemic. It decreased in 2021, but increased again in 2022. This sounds really high, but it's best to compare the ratios to Comcast competitors. Now, I looked at Charter Communications and found that their allowance was over 6% pre-pandemic and rose to over 8% during the pandemic, so even higher than Comcast. Sometimes publicly traded companies provide additional information in their 10-K to explain the increase in bad debt or uncollectible account expense, but I didn't see any notes in Comcast 10-K regarding the increase. An additional expense is the cost of collection, meaning sending collection letters and making collection phone calls. Companies have to factor these costs into their decisions about granting credit to customers.